Welcome to this week's episode of Todd Talks. This week, we had a wild week in the markets. We had unbelievable meltdown in the stock market. It affected interest rates. Initially, it didn't, but then there was worried about the bond market, which directly impacted interest rates. So interest rates started to go up very rapidly. The market started to crater. And then there was an initial deal made / strategy shift on the tariffs that reversed everything. But it brings a good point up that I want to discuss with you today. And I want to give you some demonstrations. It's going to be a short, but it's going to be detailed. They give you details and data so you can make great decisions about your future. One of the things that's happened when this kind of market, it takes everybody back and puts them on their heels and says, well, maybe I should wait to buy to see what happens. And there is a lot of propaganda is what I'm going to call it, or at least a belief that's being pushed out there by both the media, the business media, and the media in general, and really it's a prevailing belief held, and on the face of it, it would seem to make sense. Well, if there's tariffs and the products coming in have to be tariffed, then the end seller is going to pass that increase along to the consumer. Therefore, prices are going to go up, and therefore inflation is going to happen. Except that that's not what happens. Most people are unaware of this, but the United States of America actually operated on a tariff system since its foundation of the Republic until 1913 with the creation of the Federal Reserve. So during that time, we had a tariff system, which is how we financed everything. There was no income taxes, and the government was financed by tariffs. And you know what? We had zero inflation for that whole time. And then what happened is the Federal Reserve was created, and they were able to create a fiat money system. They did it for a lot of reasons, to create more flexibility. There was issues with historical money systems, but we'll leave that aside for now. The bottom line, though, is they are able to inflate the monetary system. So inflation is always the result of too much money chasing too few goods, and it's always driven by the creation of money, i.e. government overspending. And that is what's caused inflation, particularly the last 4 years, has ramped it up. We've been on a glide path like this as far as our national debt, but it's getting worse and worse and worse and worse. And now this administration is trying to do something about that, and hopefully they are successful no matter where you stand on the political aisle. I'm not making a political statement, I'm just saying it's good for everybody if they can address that. But the point is that inflation's the result of the increase of monetary supply, not tariffs. And let me give you some interesting data this week. So because the tariffs have already gone into effect, we've already had an increase in tariffs even before this week, the big one. But I want to go into some details. Not sure how well you can see this, but this is the economic data that came out today. So the core CPI, that's the core inflation. The previous was 0.2, the forecast was 0.3, and the actual was 0.1. It went down. Okay, look at the year-over-year core CPI mark. Previous 3.1, forecast 3, current 2.8. So what's actually happening is inflation is starting to come down. And you guys are probably like, eggs is a good example. Like eggs have come down. Gas has come down. Prices are actually coming down. And that's what's going to help mortgage rates, because mortgages are actually bonds. So mortgages are packaged up and sold into long-term bond packages, and they compete with U.S. Treasuries. So they typically are around 2% or more higher in interest rate of whatever the 10-year Treasury is at. And so because those are fixed income, meaning people get a fixed interest off of those when they invest in them, inflation is the enemy of fixed income. So high inflation always requires higher mortgage rates. But as that comes down, rates are going to drop. And I'll show you like what happened this week with the volatility. This chart shows when these prices go down, that's rates going up. And when they go up, this is rates improving. And then going down, this is rates worsening. So one of the things I do is I use all of these tools to make sure when you're a client of mine, we have a really good handle on the market and whether we should lock the interest rate or float the interest rate. So basically all my clients I locked in as this started to unfold, because it's too uncertain right now, at least short term. So the prevalence is to lock. But rates are going to continue to trend down. I've been predicting all along. It won't be a straight line like that. It could happen. And if it is, great. But more likely it'll be a step there, like a little raise, and then a step, and then a little raise. That's more likely what's going to happen. And let me tell you what happened. Last week, rates had a real big improvement initially, and we had a 20% spike in demand for purchase applications and mortgages. And this is exactly what I've been telling everybody that was going to happen. As rates fall, it drives demand. And guys, there's not enough houses out there with a higher demand. It's going to push, builder incentives are going to go down, and you're going to be in a multiple offer situation. So this is your sweet spot to purchase. Don't let the propaganda of the media scare you. The economy is going to be fine. Inflation is going to take care of rates, and rates are going to continue to drop in almost all likelihood. Foreseeing some kind of black swan event that nobody could see right now, and the probability of that happening is basically zero. So reach out to me. I will prepare you a great mortgage plan. We have amazing interest rates. We have a special program for new construction that has the lowest rates by over 1% of the market. For the resale market, I have extremely low interest rates and great ways to show you how to optimize your finance package. And the same thing for refinances as rates come down. So thanks so much. Hope you found this helpful and hope you have a great day.